Hello and welcome to today's Dave Show. As always, I'm your host, Dave. I can't wait to dive into today's subjects. We're going to be talking about the stock market. We're going to talk about Reddit and the retail traders. We're going to be talking about America's student debt crisis. It's out of control. And we're also going to, speaking of out of control, we're also going to talk about the Canadian housing market and how it just keeps going up. Without further ado, let's hop in. Hey everyone, welcome to the Dave Show. So this is a show where we talk about current events, cryptocurrency, politics, and how it relates to you as a real estate investor. So if you like what you see, make sure to subscribe to the channel, hit the bell to get notified so you'll know every time we release a video and when we go live. Now with that said, let's start the show. So first off, let's begin talking about the stock market and how it's been nothing but a buzz this week. The hedge funds, well, the big hedge funds and Reddit have been going at it head to head. Now, if you're not aware, I'll break down briefly as to what exactly they've been doing and how exactly they do it. So what are they doing? They are shorting a stock. And what that means is the hedge fund thinks that GameStop, the company GameStop, is not going to do well. So instead of buying their stock and betting for them, they bought a stock betting against them, and that's what shorting is. So that's when the people on Reddit decided to go against them and topple that idea. They were able to do this by actually buying the stock. Once they heard that the hedge funds, the big hedge funds, the big boys, were shorting it, they decided to do the opposite. They wanted to up the stock value. So Reddit started to buy a lot of the GameStop stock. This is the power of Wall Street bets banding together and actually overtaking the big boys on Wall Street. So let's dive in. I'm going to explain what shorting means in my terms. And this is going to be very, very basic. But what it means is you don't actually buy the stock. Let's say someone over here owns the stock of GameStop. Let's use that as the example. They own it for $10 and you don't buy it. You borrow that $10 stock and then you say it's going to go down to minus whatever amount you're thinking, and then that's how you make your profit. But when that borrowed stock now jumps up to, let's say, $100, well, you have to pay that person back the borrowed stock plus the gap now, because you have to buy the stock at 100, no longer at 10, and actually give it back to them. So in this scenario, what I just did, the $10 and the $100, is they bought it at $10, it skyrocketed up to $100, and again, this is just example, and now they have to go buy it at the $100 to give them back their $10 stock. That's 10 times what you actually borrowed it at. So this is what these hedge fund managers are going through, and that's why they're losing billions of dollars. Now the hedge fund managers are starting to fight back, and what they're doing is they're going to the app where the Reddit users were actually purchasing the stock, and that app is called Robinhood, right? Robinhood, steal from the rich, give to the poor. Well, now the rich big boy billionaire hedge fund managers are going to Robinhood and saying you need to stop accepting these purchases of these particular stocks because it's hurting them. Is that fair? Not really, but even Elon Musk weighed in and basically blasted Robinhood because they were not allowing the little guys to compete against the big guys. So the hedge fund is starting to fight back. I'd love to see where it ends up, but only time will tell. So we're at an unprecedented time now, right? Where day traders can actually make a big shock in the market against these massive hedge funds. Now, is this the end of it, or are we just starting to see what's going to happen? Rumblings are this is going to be happening with silver on an even bigger stage. Now, the second thing, I want to talk about the American student debt. There was a report that I was reading that was just mind-blowing that 40% of Americans are not making their student debt payments. That is crazy. I have never heard of something like that. Almost half of the people aren't paying their student debt. Now, why is this important? Because the student debt is actually backed by the taxpayer. People are now feeling this crunch and not making the payments. I can't wait to see where this goes. But again, this is almost a consequence from why would you give a 17-year-old a $100,000 loan with no viable income down the road? I think they created their own mess. My suggestion to fix this problem is maybe having some sort of caps per year per student, maybe looking at their overall game plan. What is the degree they want to get? How are they going to be able to take that into the workforce? My last opinion on this is maybe they start making it a forgivable loan. Maybe if people have paid a certain amount in a certain period of time, they've gained employment, they're paying taxes, the government can look at possibly writing off a portion of that or forgiving a portion of that. I don't know, just a suggestion, but what they're doing now is not working. Last up, let's talk about the Canadian housing market. So I'm pulling a stat here from CBC that said as of November 2020, the Canadian housing market was up an astonishing 13%, and that is during a pandemic, okay? That's just bonkers. Now they're predicting that in Ontario specifically, they are going to see an increase of 16% this year. That just doesn't make sense. Again, during a pandemic, an increase of 16% in a hot market like Ontario. If you're thinking, Dave, how does this affect me as a real estate investor? I see this in two different ways, right? If you're looking at buying your primary residence, a first house, I would probably wait off and not buy in a market that's going to be going up by 16%, right? That might not be a good idea. However, if you're buying income properties, I would not be fazed by these numbers. Income properties, especially the buy and hold type, are not affected by these drastic market increases. You're going to be holding the asset for the next 20 or 30 years. So what the market does in 2021 won't necessarily have any effect when you still have it in 2051, right? It's just going to be another bump in the road. So the housing market, yes, is going up. The stats, like I said, are astonishing. They are suggesting that it is because the interest rates are rock bottom. It's almost free money right now, right? You have 2%, even lower interest rate. Heck, inflation is 2 to 3%. That's what I mean when I say free money, is the interest rates don't even come up to the actual inflation rate. And then there's also a huge demand and a shortage of supply. People are moving out of big urban centers. People are flocking to the suburbs. People realize that they can work from anywhere now with a laptop and an internet connection. So I think that really contributes to the housing market boom. But 16%, wow, who saw that one coming? Now, if you're saying, Dave, I absolutely want to buy a house right now. I can't wait. I have to buy my principal residence. Okay, I get it. I've been there where I didn't want to wait. So if you absolutely can't hold off until this bubble bursts, what I would suggest is finding a market that isn't necessarily at the 16% mark, right? My market as well has gone up. However, there are markets that are not at the extreme end of the spectrum where you can still get a good deal, where even if it bursts, the value of your property won't go plummeting. Next thing is, if you're already a full-time real estate investor and you already have properties in the market, I would suggest refinancing them, right? Refinance while the market's up. You can take that money, you can put it aside for a rainy day type thing, let's say if they're non-payment of rents from tenants, or you could wait till the market takes a plunge and you could have money that you could put into buying other buildings, right? Where you could maybe get a deal on or a bargain on. Having money right now is a great idea. If the market does take a dip, you'll be there ready to buy more income properties. So what do you think on all three subjects? The first one, the hedge fund versus Reddit. Where are you at? Are you team hedge fund or are you team Reddit? Let us know. Second thing, the debt in America, the crippling student loan. Do you think they should forgive it? Do you think, nope, that's the contract they signed, too bad, so sad? What are your thoughts? And last up, do you think Canada, especially Ontario, is on the verge of a bubble bursting? Let me know, I'd love to hear your opinion. So if you like today's show, make sure to like the video, subscribe to the channel, and hit the bell to get notified for more content like this. Make sure to check out our last video. I'm Investor Dave, and I will see you next time.